Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at 3 different penny stocks, all with buy ratings. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are going to take a look at 3 different penny stocks that all come with buy ratings from analysts and are also all available on Robinhood. So we are going to take a look at each of these companies and what exactly it is that they do, plus what price targets analysts have in mind for their stock's future. And just before we jump into that, this is just your friendly reminder that if you enjoyed today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. Also, if you enjoy free stocks, make sure to check out some of the links in our description. Right now, Webull is giving away 4 free stocks for signing up and funding a new investment account, so make sure to check them out. All right, now let's talk penny stocks. And of course, just a reminder that these videos are not a suggestion to buy or sell any specific stock, but are just meant to bring new stocks to your attention that maybe find a way onto your watch list. Especially with penny stocks, there is a lot of volatility there, so make sure that you do your due diligence before making any investment decision. With that being said, let's get into these 3 penny stocks. First up is Denison Mines. They trade under the ticker DNN and are currently just over 56 cents per share. Now, in December, they've actually seen a rise of about 49%, and this last Friday was actually the first sign of a bit of a pullback. As the name may imply, Denison Mines is a mining company that is best known for their uranium mining. Denison has a 90% interest in the Wheeler River joint venture consisting of 19 unsurveyed mineral claims totaling 11,720 hectares in northern Saskatchewan. Denison has been the operator since November 10th of 2004. In regards to uranium, they say that the fundamentals are improving, leading to a positive new uranium cycle. Long-term contracts from the previous uranium bull cycle have acted as a lifeline to high-cost mines, and this is coming to an end, with significant uncovered utility requirements emerging as Denison is expected to enter production. Energy stocks have been gaining ground a lot more recently, namely alternative energy and non-fossil fuel-based producers. What might have also been one of the unsung heroes right now is nuclear energy production. One of the main ingredients is obviously uranium, which Denison mines. Something else to note is that the company is now evaluating the potential use of the in situ recovery mining methods, or ISR. This method could allow the company the benefit of not incurring having to discover and develop massive-scale uranium mines while generating optimal output, especially at its current deposit. Hearing from David Cates, the president and CEO of Denison, the selection of the ISR mining method for their current deposit has transformed our expectations for the project, generating robust preliminary financial results with comparatively modest upfront capital costs. There are currently 7 analysts with ratings on the DNN stock, and it comes in at a buy, with 4 buy ratings, 1 outperform, and 2 holds. The average price target for Denison Mines comes in at 75 cents per share, which represents just about a 33% upside. Now, on the high end, we have a price target of $1.23, which would represent about 118% potential upside over the next 12 months. Second on our list today is Arbutus Biopharma Corporation. Trading under the ticker ABUS, they are currently at $4.19 per share. Arbutus Biopharma is dedicated to discovering, developing, and commercializing a cure for people with chronic hepatitis B virus, or HBV, infection. Now, HBV is the most common serious liver infection in the world, and it's estimated that close to 300 million people worldwide are chronically infected. Arbutus is something to watch for its hepatitis treatment platform. The last few weeks have seen the company report significant progress on AB 72901 trials. There's an ongoing phase 1A, 1B clinical trial on their treatment. This month, Arbutus reported strong data supporting that for treating chronic hepatitis B. Now, they also initiated a drug discovery and development effort for treating the ronavirus. Since its treatment platform is based on principles of RNA interference, it could be something to keep track of. A new analyst recently initiated coverage on Arbutus from H.C. Wainwright, and they mentioned that the company is unique as a hepatitis B virus pure play, given that its management has designed and assembled a broad proprietary portfolio. He further sees momentum building for the AB729, with more definitive positive multi-dose data in Q1 likely to represent a significant stock catalyst. In their latest investor presentation, they set out key 2020 objectives, but also highlighted the compelling growth opportunity in the HBV market, showing how many cases are not only undiagnosed but not treated, and that an HBV curative regimen would substantially increase diagnosis and treatment to unlock significant market growth opportunities. Currently, there are 6 analysts with ratings on the ABUS stock, and it comes in as a buy, with 5 of those analysts rating it a buy and 1 rating it a hold. The average price target is $7.50 per share, representing just shy of an 80% potential upside. Now, on the high end, we have a $10 price target, which would be about 139% potential upside over the next 12 months. Now, the third stock on our list we are double dipping on, as it is one that we have discussed before, and that is GEVO. Trading under the ticker GEVO, we first discussed these guys back on November 24th when they were at $2.14 per share. Since then, we are up about 28%, and as of today are trading at $2.68 per share. GEVO is a renewable energy company that focuses on creating the next generation of fuels. That includes its own offerings of gasoline, jet fuel, and diesel fuel. However, unlike traditional fossil fuels, the company's products create much fewer carbon emissions. GEVO believes that its fuels will be able to reduce carbon emissions from fuels to zero, and also notes that their fuels perform as well or better in engines as traditional fossil fuels do. Instead of using the normal elements of fossil fuels, GEVO's fuels make use of low-carbon, renewable resource-based carbohydrates as raw materials, and they aren't just focused on the creation of greener fuels. They're also working on creating types of plastics, including polyester, that is made with sustainable ingredients. The company's pipeline and backlog has been in discussion for months. In its latest quarterly update, CEO Dr. Patrick Gruber explained how big of a turning point the second half of the year has already been. In particular, Gruber highlighted its deal with Trafigura, a major energy player. This deal brought its total offtake total to roughly 48 million gallons per year, representing a value of about $1.5 billion of revenue across the life of the contracts. Something else to consider heading into 2021 is what's planned for the upcoming quarter. GEVO began producing approximately 50,000 gallons of renewable isobutanol. The plan is to ship the isobutanol for use in the production of renewable hydrocarbons during the first quarter of 2021, with more planned for the second quarter of 2021. Currently, there are 2 analysts with ratings on GEVO stock, and it comes in as a buy with a medium price target of $3.75, representing just shy of a 40% potential upside, and a high-end target at $5 for about an 86% potential upside over the next 12 months. So there we have 3 different penny stocks, all with some fairly attractive potential upside. As a disclosure, I am currently invested in GEVO and have been since my first video on it back in November, and we'll be taking a look at these other 2 and thinking about starting a position in one of them. Of course, these videos are never a suggestion to buy or sell any specific stock, so make sure that you do your own research and due diligence before making any investment decisions. And you guys know I always love hearing from you, so make sure to leave your thoughts on these penny stocks down in the comments below, or what other penny stocks are catching your eyes lately too. If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.